everyone, and welcome to this week's Flash Friday Finance Update. I'm here with the delightful John Clifford, who I'm pleased to introduce to you. John is from Lumi, who are business lenders. Welcome, John.
Thank you very much, Louise. Pleasure to be here.
Great. And John has been in the fintech lending space for the last 6 years. So he's got a lot of valuable insights into people needing these sort of loans, when they might use them, all that sort of thing. So we've got a few questions, and here's the key. This week, John gave us a big box of chocolate, which we'll put a photo on. So the first person to email me one thing they have learned from today's video will win the chocolates, and I will mail them to you. How about that?
Fantastic.
Yeah, I might even deliver them. So you never know. Please, someone from Queensland. No, we'll see. So my first question is this: how did this sort of lending, this fintech type lending, become established in Australia?
Yeah, thanks very much, Louise, and thanks also to everybody for listening. So the first thing that I just want to address before I jump into answering that question is 6 years in fintech lending doesn't sound like a particularly lengthy tenure, like some old greybeard of the industry, and I understand it. But when it comes to financial technology lending in this country, it's relatively recent arrival. So two of our major competitors kicked things off about a decade ago. And as you can imagine, when you come to market with a new small business or small and medium-sized business lending product, you frame your own market, you write your own rules. And as a result, at the outset, this particular type of lending was particularly expensive. So you would see things like factor rates of 1.4 or 1.5. For the uninitiated, what that means is that a $100,000 loan repaid over 12 months would see total repayments of $140,000 or even $150,000, which is quite significant. Now, I don't know if after 10 years you describe a market as having matured, but insofar as there are a number of more competitors involved in this space, including ourselves, it has done. And as a result, fast followers like ourselves at Lumi, who are about 5 or 6 years established, we've been able to come along and, I suppose, if anything, make a more efficient market, drive pricing down for the better quality clients, and provide more solutions and options to brokers and their clients out there.
Super. So on that note, who are your best clients? Who are you looking for to lend, and who's best lending from you?
We provide two different options. We provide working capital term loans and lines of credit. So an overdraft type facility, which is really flexible. The client draws down as much as they need when they need to. They can repay on an ad hoc basis, and they'll only be charged for the funds that they draw. We offer those between $5,000 and $500,000. And look, our average deal size is going to be about $60,000 to a 2.5-year established client. The types of businesses that we lend to are really varied. There's only a very small number of businesses that we can't lend to. So those would be people in primary industries like forestry, fishery, agriculture. Unfortunately, we can't help those. But typically, this particular type of lending has been really embraced by small business owners like cafes, food and beverage, hospitality, retail, et cetera, et cetera. A few of those businesses, in particular food and beverage, are under particular pressure at the moment. However, we're still really bullish and really confident about our ability to accurately underwrite those deals, price them really sharply for the risk, and ensure that those small businesses get access to the funds that are absolutely crucial to their ongoing survival.
So if, say, a cafe needed to borrow some money, what are the circumstances that they're needing this? And these loans are unsecured, aren't they? No
Yep.
property security. They're just on the business financials themselves, aren't they?
Yeah. So I might
How
talk
they
a bit.
work? Yeah.
Yeah, absolutely. I might talk a bit broadly about why it is that fintechs exist, and then
Yeah,
I'll speak
that's
specifically
good.
about
I'd
what
love
the
you to
cafe
do
would need
that.
to do that. No problem.
Go.
So the reason why lenders like Lumi and the other fintech working capital lenders exist is that we're filling in a gap that the big banks, like them, loathe them, whatever attitude it is that you have towards those 4 or 5 giant organizations, they don't really have the appetite for this particular type of lending. The banks have become much more asset-based lenders. They're not really interested in the unsecured side of things that much. In order to get an unsecured facility, you would typically need to have your mortgage with the bank, which in effect doesn't really make it an unsecured one.
Yeah, you're actually right, because often they will still charge business rates, but they're using a house which you could borrow. And we will often borrow for people against a property as an investment type debt, and then they can use it however they want. But
Yep.
yeah, you're exactly right. If you don't have that option, what are you going to do? So this is where you come in. Yeah.
Absolutely. As much as the banks would tell us that they are modernizing and leveraging technology and things like that, the reality is that they are giant institutions with probably legacy systems. And the estimate is that the cost to a major bank to underwrite a $50,000 working capital loan in man or woman hours is the exact same as it is for a $500,000 loan. So as a result, they really don't have interest in those smaller type facilities because there's just not enough margin in them. The other thing is that they typically tend to be looking for more documentation. They look for more established businesses. And as we both kind of agreed, they tend to be looking for clients who are property owners. Now, the reality is that 97 to 98% of businesses in Australia are small and medium-sized enterprises, small being somebody who has a turnover of less than $10 million. Medium is less than $250 million. So that's a big kind of jump. But if we just look solely at that small cohort, it's an enormously important part of the business, of the economy. It drives about 33% of our overall economic output each year. But equally, this is the segment of the market that finds it most difficult to get access to funds. So as I said previously, our average deal size is about $60,000 to a 2.5-year-old business. They've got through those early days where it was really touch and go as to whether they might survive. And now they're about to embark on that growth phase where they really become secure and solid in themselves. So for a loan of that amount, typically we would require a brief online application. So about 5 or 6 questions answered. We would then get the client to provide their banking using ilionbankstatements.com.au. That's increasingly commonplace in the market where clients just do that quick connection and we're able to draw down. Yeah, we can draw down.
Exactly the same. Yeah,
Oh,
we use
great.
statements. It's well used to that. Absolutely.
Oh, good. And then, once we have that basic information, so the kind of questions that we ask are the nature of the business, the purpose of the funds, time and operation, credit score, that kind of thing. Once we've ascertained that the client meets all of the various criteria that we have, generally, we really do leverage best-in-class technology to provide credit decisions very quickly. We had a deal last week where from the time of submission to the time of approval was about 57 minutes.
How about that?
Yeah. Yeah. Now, what we do is we don't automatically pull the client's credit file. What we do is the client approaches us, and if they don't service within 20% of the amount that they've requested, we're not going to hit their credit file. So we'll come back and we'll speak to the broker or whoever's the intermediary, or just to the client directly themselves if they've applied directly and say, look, we don't see the servicing for that. We think that you wanted $100,000. We can see servicing for 80,000. Would you like to proceed? If yes, fantastic. We'll issue loan document. If no, then we'll understand. We'll step back and the client can look at other options.
Okay, that's great. So that's good to know that you're not actually hitting their file before it's approved, really, isn't it?
Correct. Yeah. I mean, everybody wants to protect their credit scores. And I think that's a very understandable trait. The better your credit score, the better your ability to borrow into the future and at a better rate.
Yeah, absolutely. It does affect people's interest rates, which has become a lot more prevalent now with open banking. So how do people go about paying these loans back? And is default a problem for them?
Yeah. So as I said at the top, we've got 2 different facilities. So with regard to the term loans, we can offer terms of up to 5 years. Usually most of our loans will have a tenor of about 2.5 to 3 years in duration. Repayments are going to be weekly. And clients who, for whatever reason, are in a position to repay their facility in full at the 6-month mark, maybe they're going to get refinanced to a major bank or something like that at a cheaper rate. There is no penalty for repayment at that stage. With regard to our line of credit, so the clients will be approved for a facility limit and there's no obligation to draw down immediately or indeed ever. Once they do draw down, there will be a minimum kind of weekly repayment, which would be based on the amount that they've drawn. And the facility in theory kind of continues indefinitely as long as the client wishes to need it and they're in good standing so that we could be there for 10, 20, 50 years if they want. In terms,
people miss the line of credit. There used to be a thing, people.
Yeah.
The banks would lend against your home a line of credit, but they've just now priced them out of the market because just didn't like people having all these lines of credit and no one paying them back. And you're saying, well, you're actually getting them to pay weekly anyway. So you're keeping very firm eye on how their cash flow is going, aren't you?
Absolutely. From a risk perspective, if we can see that clients within the first couple of months are meeting their obligations to repay to us, it's a really good indicator as to the long-term health of that particular loan and that particular business. Now, you did ask about arrears and things like that. Mercifully, we've got a very small kind of arrears clients who get into hardship and things like that. What we do, and we're not unique in the space in this regard, is we've got a very advanced proprietary algorithm which assesses tens of thousands, hundreds of thousands, possibly even millions of data points that we've amassed over the last 5 or 6 years. that gives us a really clear idea as to the risk profile of a particular business in a particular suburb at a particular stage of its life cycle. The
Oh,
base,
that's good knowledge. Hey.
yeah. So there's an awful lot that goes into it. Every small business owner in Australia thinks that their business is truly unique, and in some respect, it is. In other respects, we can compare big data to what we've seen in the past to come up with a really accurate assessment of the risk that business poses. And on that basis, we're very comfortable lending out, and we get most of our money repaid to us, which is very reassuring for me and for my friends in risk.
So tell me, who are your best client? Like who does best from lending with you? What sort of
So
businesses?
historically, food and beverage, retail would have been the most common users of this particular type of funding, not just for
Is
myself, but
that for renovating their shops or their cafes or whatever? Is that the key thing? They need that big input of cash at some point to do that?
yeah. So there's a number of different reasons why people would use our fund. So yeah, if you take very specifically the cafe example, you've got people who potentially notice that another cafe opens up across the road and it's got all the bells and whistles and it's got a slick new coat of paint. And on that basis, the owner of that business is potentially losing business to this new competitor across the road. And they might decide, I'm looking a bit dated. My business is looking a bit dated here. I need new decor. I need that kind of thing. So fit out finance or kind of cosmetic enhancement of the property itself. Maybe they need to get a new coffee machine. Maybe they want to hire some more staff coming into a really busy period. Maybe you're in some kind of holiday locale, and in the run up to January, February, peak holiday seasons, December, January, February, you want to have more casual staff working with you, and you will need funds very quickly. Other people use it for marketing campaigns. They want to do some targeted marketing on Facebook. And then talking about the other industries or the other businesses that we like to lend to. So it's not just retail, hospitality, that kind of thing. We love manufacturing. People say that Australia doesn't really make anything anymore, but we beg to differ, and we love to support Australian manufacturers. This is going to sound very self-serving, Louise, but we love professional services. So people involved in accounting, engineering, providing consultancy. So long as we can see reasonably consistent revenue going through their bank accounts each month, we're really happy to do it. Now, typically those would be prime quality credit clients. So they don't normally look for fintech lending, which typically is a bit more expensive. But there are instances where they're looking for the funds in a real hurry. And that's probably one aspect that I haven't touched on too much. Actually, sorry, I did. I mentioned the 57-minute turnaround earlier on. But the
That's
minimal documentation and really quick turnaround is our raison d'etre, because otherwise it would be hard to justify charging more than we do, what we do, which is more than the banks.
okay. So you've approved in 51 minutes, but how long to get the money?
Oh, well, look, once we came back with that approval, we then approached in that instance, it came through an intermediary. So we spoke to the broker, he or she, I can't remember the gender of the person in question, but they spoke to the client, and the client said, yes, great, let's proceed. We issued loan documents that same afternoon. We do all of that via DocuSign. So there's no wet signatures or anything like that, as you would expect from a fintech lender. And then the client signed that afternoon, and we dispersed the funds that evening. So we received the application mid-morning. Yeah. So we received an application mid-morning. It was a relatively straightforward one. It really wasn't a complicated deal, and it wasn't a massive sum, and dispersed the funds that evening.
Oh no. Well, that can be the difference for someone having a sleepless night or not.
Yeah.
So hell's bells, that's an awesome result. Well done. Yeah,
Yeah.
that's really fantastic. Great. So any final advice for people who might be needing some of this lending? What should they do? Aside, they should approach their broker, but other than that, that's it.
Well, my title is head of third party. So I deal exclusively with people who are intermediaries in the industry, be they aggregators or lead generators or brokers who provide an unbelievably valuable service. And I will back us that if a client approached their broker and asked about Lumi, that they would get a very positive feedback about what it is that we're doing in the market. Because as I said previously, we came along, I suppose, undercut is maybe not the nicest way of putting it, but as some established players, I think we're shaken up a little bit by the fact that we came in. We get our warehouse funding from NAB. So that brought down our cost of funds massively, which means that we were able to pass on those kind of savings to clients. As small business owners, I know that typically the feedback that I've got over the years is that they're time poor, they hate jargon, and they really trust their brokers. So I would encourage them to go and have a chat with their brokers and say, look, I think that if I had $50,000, $100,000, $500,000 in finance in the next day, week, month, that I could potentially do X, Y, and Z. What are the options available to me? Now, some brokers will go, all right, let's whack it on your mortgage, in which case you're potentially paying it off for the next 20, 25, 30 years. Others will find other solutions. They might take money out against an asset that you have. And others will suggest, hey, a really quick, seamless solution that you'll have is with a fintech lender. I would hope that they would choose Lumi. But I guess that's all to be borne out.
We got to do the comparison, so it's all good. But
I would expect nothing less, Louise.
good. Oh, well, that's fabulous. It's been great to talk to you, John. Thank you so much for giving us your time. And now, remember, people, I did say anyone who emails me a question, you'll maybe win. Well, will win the chocolate. So whatever something you might have learned out of this, which I think's been fascinating because I love learning about new fintech learning, and we have done a few loans in this space, but it's great to hear from another participant and what they're offering. So thank you very much for your time. I really appreciate it.
No, thank you, Louise. Thanks for the opportunity, and thanks to everybody for listening.
Great. Have a great weekend, everyone. We'll see you next time. Bye.